So thought I'd do a recap as I posted a markup on this in the week and had quite a lot of messages, people asking can I go through the thought process, go through, not my Santa hat by the way, well go on. Just a lot of people asking can I go through the thought process, can I go through you know, the trades and whatnot. Obviously, as I said at the beginning of the month, I haven't traded for December. I was done. This is domain. I was done early on. So I obviously have been turning up every day. I've been doing my markups, been doing my forecasts. I've been watching. I've just been kind of chilling and reflecting a lot. There's been some great trades. Don't get me wrong. I've been tempted a couple of times. But I just sort of stuck to my guns and thought, you know, I've had a good year. I don't need to force anything right now. I want to chill. And I'm trying to work on that discipline. So if I say at the beginning I'm not going to trade and then I start trading, then that just shows I've got no discipline and then that affects me later on in trading. So I'm trying to like kind of test myself as well. But I've missed some big moves. But as always, you know, doing the markups. I know I haven't done a video for a couple of weeks. I apologise. The only reason I didn't is because if I'm not taking the trades, I feel a little bit weird calling it a trade recap. Because essentially it's not, because I didn't take it. But again, if it adds value, then I've got no problem doing that. You know, as we go on, maybe I'll see if there's some sort of content. The thing is, content we've got, it's like it's all there. Like the trade recaps, like putting it all together. I think there's obviously a lot of value in them. So yeah, here we are. Anyway, I'm gonna put this back because now I don't look Christmassy if it's not there. So I'm just gonna have to deal with it whacking me in the head like a freaking ball bag hitting you or something. Right. Anyway. So, this trade, right, okay, so obviously, you know, all it is a lot of the time is it's just waiting for areas to be hit. Obviously, this failed to create a high once, okay, so you could say this is weak, should get run. We've then come back in and we've had mitigations here, you know, in this wholesale to buy. We've had multiple mitigations and we're trying to put an attempt on the highs again. So, don't be wrong, you know, just pretty much big range, okay, well, pretty much all this. It's not ideal, but there's, again, it's about trading the edges and it's about kind of, if you can make sense of it, put risk on it. If you can't, then obviously don't. So obviously we had this. Now, I'll be honest, I did expect this to fail, but notice that it, you know, it wicked these lows. You're expecting it to probably pull back. A lot of us were probably waiting for this wick up here. But remember, this hit, I know it's not ideal, but this is buy to sell price action. So within here, this has had a mitigation. So this could, you know, put in a new low. Obviously, it's attempted once and failed, but we could be pulling back for more liquidity, and then this could become the confirmed sort of level that, you know, breaks the low. So there's certainly opportunity to short. Obviously, if we just quickly look at the daily, you know, we are super bearish. I'm not sure what that is. Man, looks like I'm trading in balance, mate. That looks good, doesn't it? We're super bearish. Obviously, we took out this supply, but only with a wick, and then it's almost like supply regained control. We then came in here, had a mitigation, looked like demand was taking control. It hasn't. Obviously not ideal price action. If we go to the 15-minute though, the way we were seeing it is, I think what a lot of people got confused with is this was our swing, right? So we were literally trading in between that, and I believe that was like 140 odd pips. Yeah, 144 pips, right? So obviously, this is tradable, don't get me wrong, like this was really nice, right? Really, really nice supply chain. But when it failed to break the low and close below and it swept, it was almost like, okay, demand might be taking control. And then all these areas just become internal range liquidity that, as you can see, kind of all got smacked, right? Then obviously we have this top of this supply chain hold, and then we have another attempt, but it fails, and we kind of just go into this range, right? So at the time, it's like, well, we've got to use internal structure. Now, obviously, seeing that we had a supply chain here, right, and then we had that mitigation, and from this, you know, we came and we closed below those lows. On the 15-minute, I was kind of saying to myself, at this area, there's a possibility we could still see shorts playing. It's the extreme of this internal structure, not the swing, just its internal structure, right? Sometimes when you're in a big range, you do have to adapt to internal. If you don't want to, then just don't trade it. It's pretty simple. So obviously at the time, you know, I think I had this, wanted to see some kind of inducement. It didn't really give it. Then I had this marked. It didn't really give it. And I'll be honest, I didn't have what I've currently got marked. The main reason for that was because I didn't think it was going to hold. Nonetheless, I reacted when it did. So this is the thing, right? When I'm watching price, obviously it broke these levels, so I was at my screen. Once we tapped into this, I was like, right, well, let's see if it closes above. Because if we close above, we could take out, you know, this whole leg, and then we could have a liquidity sweep, and we could obviously drop. Then obviously it stopped dead, and we got a reaction. And at the time, I think I was on like the 1 minute, and I was like, all right, we've had our first mitigation. Now again, remember when you're doing your markups, we've spoken about this a lot. A lot of the time, the first tap of a POI higher time frame will fail. There's times where it won't, and that comes down to the inducement before, and if it's taken out liquidity before. But a lot of the time, it will give you that false chock, right? And you'll take a buy, and depending on your stop, take a sell, sorry, and depending on your stop, you'll get taken out, and then you may not look to re-enter, right? Now, obviously, at this point, I'm not saying, yeah, mate, I'll be in here, sweet, just chilling. Not at all. Obviously, if that's how you trade, if you found something refined and you've used the seconds, cool. Jesus Christ. Excuse me. But I was like, it's not really enough to go off yet, because again, don't be wrong, we're generating this, and I'm like, well, why are we generating that? We've come in corrective, we've swept to high, so we could now see sellers take control. But also I was thinking, right, well, one thing I've started looking at a lot is the 15-minute, right? At the moment, the chock's down here, okay? Now, again, don't just all run to this on the 5-minute like an absolute head case. That's not, not what I'm trying to say here. It's not new source at all, right? But when the 15-minute chock's down there, I'm like, okay, well, we've got chock there. Now, again, it's all about making a decision, right? So in the moment, the decision would be, am I happy to trade this knowing it's pro-trend with a 1-minute entry? In theory, yeah, because pro-trend, 1 minute, fine. Now, obviously, we've had a ridiculously bullish run, so you may want to see that momentum slow down. Now, the 15-minute change of characters here, and if you want to wait for that, absolutely fine. I'm going to mark this 15-minute just so we've got it there. I'm just going to put like the 15-minute boss line so it's there, right? But one thing I've been logging, and remember, I didn't take this trade, so it's not like, oh, this is what Albie does, we've got to do it. Just start logging it, right? I saw the 1 minute change character here. Okay, and obviously in my head again, I'm like, right, well, you know, we've got this kind of, this candle here. Now, this is a buy candle. I'd prefer to see sell to buy. So this is where you can just go to the 2 minute. And you go, okay, we've got that. You could go to the 3 minute if you wanted to, just to find something. Oh, okay, cool, we've got a 3 minute candle, right? So now we have a clear demand, right? Sell to buy, broke this level, prices come back in. If this fails, then it's showing me supply has gained control, and I'm happy to look for shorts, right? Now, obviously, yes, there's a 3 minute change character there. You know, you took this high out, you take this low out, bosh, bosh, bosh. But at the time, I was like, right, what's the 5 minute? And the 5 minute, funny enough, is identical to the 3 minute. And a lot of the time when you have that, it usually is because it's a very valid level. So here, you could have your chock down, if you wanted to be conservative, as that level, which is the 5 minute, and it's also the 3 minute, right? I was just going to mark the chock up here so you can see it. Now, if we quickly go back onto the 1 minute, you'll see how realistically the change of character was here because we have this inside bar. Now again, this is where data gathering comes in, because you could say, when I see this kind of price action, it doesn't always play out for me, so I want to wait for a clearer break. Just like here, right? I think that trades, does it trade the same? Right, they trade at the same. But let's say, right, here, you took out this high, right? And then let's say this is our low. Obviously, yes, you can play that, right? It's the same as if you trade at the same level and you're happy to play that, fine. But if not, you're looking here, right? That likely hasn't broken anything on a higher time frame. If we go on like the 5 minute, and see how there's nothing. It's just one candle. And even if we went on the 3 minute, you can see how, again, it's nothing. It's just new high, new high, new high, new high. So this break means nothing, right? This is real structure. You can see it's confirmed here. It's confirmed the higher low, which puts in a higher high. So we want to see a higher low actually failing. It just confirms it. Now, don't get me wrong. I'm not standing here saying I wouldn't trade 1 minute stuff, because I'm aggressive with it. But remember, it's all about context of what we're currently trading and the higher time frame. When you see the 15 minute coming into you like an absolute cruise missile, you have to make a decision if you're happy to play the 1 minute or you want to wait for a higher time frame. Again, you could wait for the 15 minute, and there's definitely a trade from the 15 minute. So again, don't think, oh, I've got to change something, but I just wanted to drop that in there. It may help people. Again, if you're getting a lot of losses and you want to filter them a little bit, one, you've got the first mitigation of a higher time frame POI. It tends to fail unless there's a pool of liquidity before it, which structural liquidity, which I spoke about in my previous video, and Alex has got a lot of content on it as well, so definitely check those out. If not, then you can implement this, maybe the 3 minute, maybe the 5 minute, sometimes pro trend. I wouldn't be doing this counter I want 15, end of story. But pro, I'm happy to play like a 5 minute, and 9 times out of 10 doesn't tend to fail that often if it's right. Now you're going to be like, oh. Look, the only way I know this is because I log data. If I didn't log data, I wouldn't know. So this is why it's so imperative that you're actually doing markups, because if you're not doing them, you're not going to have this data and you're just going to wait for us to drop it. And don't get me wrong, we're more than happy to drop all the source in the world that we find that we have data on. But if you don't understand it and you don't believe it and you don't want to implement it or can't implement it, then it's no good to you. So just remember that. This is not like a new source video, but just go over your markups. Just have a look. And that's why I like to log in the 5 minute. Anyway, waffle. Come on, mate. Come on. Right, so obviously here, what we're doing now is we're just waiting to see if this is now a failure. Now, don't get me wrong, you might be sitting there going, why wouldn't you use that? Again, for me personally, I like to use sell to buy price action or buy to sell price action. That is a buy candle. So I would like to see sell to buy. Now, don't get me wrong, you could just do that, and that is the 3 minute. It's not a problem, okay? Obviously, also, we've had our first kind of, what do you call it? My mind's literally just gone like a monkey, mate. Our first respect of supply, okay? And what did this do? Well, this first level of respect chocked. It did chock. It did change character, and it gave us that entry. And that's why sometimes, you know, when you have data or you have trades that just chock and they play and you're like, I could have got in there. Oh my God, it didn't fit the model. Oh, the model's rubbish. Right, I'm going to the old model. Or I'm going to my own model. And then all of a sudden you'll be like, I'm getting smashed about a lot. And it's like, yes, because chock will happen everywhere. And yes, you can just play higher time for mitigation chock. I'm having it large. You just need to be mindful that it needs to be a clear as day chock. This one here works, right? And don't be wrong, if you let this run to the 15-minute demand, you make wedge. But how many times will it play? And this is, again, it's down to you to figure that out. Like, I can't say to you, 4,000,025 thousand times chock like that will fail, but 62.1 thousand times it won't. You need to figure that out for yourself, okay? So we've had our first level of supply. We've had a hold of supply. We've taken out an inside bar, so we've had a form of 1 minute change of character, right? We're now seeing if we can actually break a true 3 minute demand that is a confirmed higher low, and we're waiting to see if we start to see bearish order flow truly kicking in, right? We've got this here that is the next level of supply that has also been mitigated. So play this on. And we come in and we sweep those highs, mitigating deeper into this, and then we're looking to be like, this demand is going to fail. What happens? We wick it, we close below it, right? We failed. So in this instance, I'm like, okay, well, we've had this, we've taken out, this is swept here. So yes, of course, this whole level could see a reaction, okay? We've then had this buy to sell, which was the true fail, okay? Now, I don't think that swept. 3184, 3184. So they're equal, so you could say this is looking really juicy for a bit of inducement. Okay, cool. So we play it on, right? And at this point, you can say, right, you know what? I think this is going. And if we go on the 5 minute, we've closed below on the 5 minute, and what have we done? We've printed this. So bear in mind, we've got this 1 minute. I know I use the same color, so this could get a little bit messy. I'll try and keep this clean. I'm going to mark this buy to sell on the 5 minute, right? That was the flip of the 5 minute demand, 3 minute demand, right? I want to see if we trade back into this. Because if we trade back into this, which is this 5 minute, I want to see what happens when we get there. Because this is the whole playing reaction, right? When you're playing a reaction, if you're aware this is essentially our extreme, right? This is the last sweep. Then we came back down, we had a mitigation, we pulled back in, we dropped some liquidity, so you could be like, I'm waiting for that. And that's fine. But if we come into this knowing that now it's a 5 minute, and it's why using your time frames is so important, we now know this is a 5 minute, right? If we come in here and we get some kind of like 1 minute change in character, mate, we can short it and know if it comes higher, it comes higher. That's all the reaction play is waiting to see what happens, okay? And again, if you're not happy to play this and you're waiting for the 15-minute chock, no dramas at all. Literally just showing you how I marked it up. And this is the process I go through. So when I do a markup, I do literally what I've just done. I play it on bar replay because I want to feel like I'm in the moment. I want to feel like I'm there. You don't have to if you're still learning. By all means, just mark things out as we are. Play price on, let it hit things, and go from there. Okay. Now we've taken out this. We've mitigated this. So it's just, again, second mitigation. Have you noticed how a lot of these mitigations have more than one? Right, happens a lot. Again, data gathering. Okay. So where's my bar gone there? Right. So we're playing this in. We're in session now as well because we're at what, 12:30s. So we know if we want to, we could look to play trades here. We know we're in a 5 minute, which is the bigger one, and we know we have this 1 minute, which is above, and that's the extreme of the 5 minute leg. Okay. So now we've taken out some liquidity, and we've had the second mitigation of the 5 minute. We've tapped once, failed, run higher, so we've taken out some more liquidity. So now if we change character, you could look to play shorts. Boom. Right. So we've come in. We've tapped a 5 minute. We've had one mitigation which has failed. So there's the liquidation. We've just liquidated a structural high. Okay. And now we've had a change of character which is showing us that ideally supply has regained control. Okay. So you could quite comfortably say, I'm going to play this guy right here, and I'm going to look to short it. I'm happy. Where's 2 pips? 2 pips is there. Now again, you might say, I don't want to cover that, I'm covering this high. And this is where some people might go, I'm going for a pip. And you cover that high. Okay? Now, for me personally, especially with FCMO, it doesn't work the best. You might want to be sort of looking at 1.5 ideally. But again, 2 pips, man, it pretty much covers if you do get a run of that high. At the end of the day, if it's coming higher, it's coming higher though, right? But we're going to roll with 2 pips. So there's one way of getting in. So we put that on there. And obviously price comes back in quite aggressive. What does it do? It leaves liquidity. So it's built liquidity for it to target. What have we got here? We've got plenty of liquidity to target. So you're in this trade. Now our BE would be here because this is what caused the pullback. Now again, another thing for you guys to look into, something I've been kind of gathering data on is obviously I used to do the whole partial 1 to 4. Now I'm kind of BE in. What I'm looking at, and we'll see, I'm not sure yet. Again, gathering data on it, is if the BE's good, get BE here, so get completely risk off, put my stop loss to entry, right? Once we run 1 to 4, also pull a partial, because then what I'm doing is I'm actually locking in like 1% of every trade. So no matter what, I'm realistically, if I can get break even and risk off, I'm actually making 1% of every trade I take. And let's say I took 10 trades and they all ended up just getting risk off and taking me out. Well, I've took 1% off every trade. I've made 10%. Like, don't all run at that and go, I'm going to do that. Just, it's something I've been trying to play around with is, right, risk goes off here, so I'm risk-free. But then when we get to 1 to 4, is it worth pulling 10 lots, 20 lots to cover 1% of the trade and let the rest run to target? Because then what you're doing is you're always taking from the market. And a big thing of mine, and it's always been a big thing of mine, is making sure you're taking from the market, you're not giving back, and making sure that you're extracting, because as a trader, it's our job to take when the market gives us an opportunity. Again, I'm just testing this. The more data I gather, the more I'll kind of keep you guys posted on it. So at this point in time, you'd be tagged into that trade, right? So at this point now, you'd be BE. Risks off, okay? So now, you're like, okay, risks off, where's 1 to 4? So let me just... I know I could have done this in a much easier way, but clearly I didn't want to. So there you could say, right, I'm going to take off, you know, the risk, whatever. Now, what we need to be mindful of is, of course, at this level here, right, we've got this sweep. And this is where you need to pay attention again. Not just, oh, I stayed in by chance, I was lucky. We need to be like, right, well, let me put that on the top so it's actually on there for you. We need to be like, right, well, that actually swept that high. So this is now a sweep. So could we see this have a mitigation? And the answer is, yeah, we could. So again, we're break even. If we don't get our risk off at the 1 to 4 zone, we're going to take a break even. But we can then look to re-enter if we wish. Or you could have a limit on that, go, you know what, that is my entry model, I want that. I'm putting a limit on this. Where's 2 pips? 2 pips is there, yeah, I'm getting in this bad boy, right? So, let's go, let's see what happens. So we hit 1 to 4, okay? So at this point, let's just say, for argument's sake, I risk 1,000 per trade. It's just easy numbers. So now we've done this, I went to break even there, which put my stop loss to entry. So I had no risk at all, barring commission, okay? Now we've hit 1 to 4. Let me just play one more candle. I'll make sure actually, like, is it going to reverse there? No? Okay, cool. Right, so we've definitely hit 1 to 4. Spreads would have definitely got the 1 to 4, right? Now we pull $1,000. Well, pounds for me, sorry. So we pull 1,000 because we've hit 1 to 4, okay? So now I've made that no matter what. So if I want to take this trade, I can put the risk there and it's basically a free trade, right? Also, let's say there is no other trade and I don't want to take that trade. Well, I've made $1,000 regardless if this takes me out for break even. So it doesn't matter, right? So, and again, it comes down to whether you've put your entry at the EQ, whether you've put your entry at the open, all that stuff, it comes down to you and how you want to do it. I would happily have a limit on that. Well, sorry, I wouldn't have a limit on that. That's a lie. I would just market execute it when it comes back, if it come back. We've also now had the 15-minute change of character, right? And what that's done is that's printed this 15-minute candle here, okay? Now, it's going to get pretty messy here, but we're going to just draw it on so you're aware of it on the 1 minute. So on the 1 minute, this price action created a 15-minute POI that caused a 15-minute chalk. So of course we could revisit this, and in theory this should hold. It's a sweep, so we're very likely going to hit that. So let's just see what we get. And obviously overall we'd be targeting, sorry I didn't talk about that, we'd be targeting this guy. This caused this change of character. Yes, you might play that as well if you want to, it's fine. This change of character, realistically pro trend, I'd be looking at it coming to here, but overall probably taking out these lows. Okay, bearing in mind we're in a range, so you want to have somewhere to target, but there's no reason why it shouldn't come down to there. So if we go back on the 1M, and we'll just play this through, so we'll see what happens. So at this moment in time, I'm not looking to get in down here because I'm aware that this extreme, right, we've also had a reaction, okay, to all of this to the left. We had a reaction. This extreme, right, is what's caused the failure, and we can probably clear it up on like a 5M maybe. Yeah, so here we reacted to this kind of sell to buy. That obviously had a mitigation here, but it's had another mitigation. It pushed up and then it failed from that sweep. So this is our extreme at the moment, okay? So we don't want to start chasing it just yet. We want to be aware of this. We've got our risk off. We've paid ourselves 1%. We're in a good position. Whether you've got a limit on that, whether you've got what do you call it on that, sorry, whether you're going to market execute it, again, it's completely down to you. Let's just play this on a little bit. So obviously at this point in time here, all right, I would have been pretty quick, and I would have literally, the minute that was coming back, I'd have just hit market execute. I'd have got in the trade, filled there. So we'd have been taken out of this, okay? But what did we do? Well, we got taken out of that with £1,000. So I'm actually up, made money, got my risk off here, and then I actually banked some money. So I'm not bothered. I then used that money to re-enter the trade because I'm confident that it's going to play out and my narrative is correct. So then what I've done is I've re-entered with this, so now I have no risk. And now, break even's down here really, right? This is what caused the pullback. So I'd be looking at going BE there, and I probably would have got 1 to 4 before it gets there, okay? So let me just clean this up. Where is 1 to 4? So 1 to 4 is here. Now each one of these candles pretty much makes a new high. So at minimum your BE would be like there. So you, on this occasion, you'd be taking risk off before you got to BE, and that's sometimes how it's going to go. And that's again where you can play with it. You could go right when we get there. So let's get there. Right. So at that point here, I just pulled £1,000. So I took my stop loss off. We're risking £1,000. Took my stop loss off. When we go here, I'm actually going to secure that £1,000. Cool. Because now, right, if this decides we're completely wrong and it goes whoop, from this we took £1,000. From this we took £1,000. We made money. We made 2K. It's 2%. It's for being wrong. It's not bad. Again, check it out. All you got to do is add it on with your markups. If you don't want to, don't do it. Don't listen to me. I'm just literally trying to, as we always do, we're trying to share anything we need to come up with findings. It's just something I'm sharing. So yeah. So there we'd go BE, and we'd secure and lock in 1,000. So now we have $2,000, £2,000, €2,000, whatever it is. We've got that locked in, and we know it doesn't matter what happens. Okay? So then now at this point, we're in 2 trades, right? And we can say to ourselves, you know, can we break this low? Yes, so we break that low, okay? So now we can go on the 15 minute and we can say, right, well, we've mitigated this 15 minute. We've had a nice reaction off it. Likelihood is, yes, there's some sell to buy wicks here. Going on the 10 minute, you could say, yes, we could react off this. Going on the 5 minute, there's a little doji we've just tapped. So, of course, we could see a reaction, but we also have to look at it as, where's our last mitigations, right? We've got this 5 minute up here. Is there anything on the 15 that we've printed yet? And we've got this whole 15 minute buy to sell. If we go back on the 1 minute, we can say that, right, okay, I'm gonna get rid of this chalk line now because it's getting a bit messy on here. So regardless, we're in these trades, right? This one we just took 1k. This one we've taken a k, but we still have 80% running. And that one we can aim for our target. You know, you might say here, oh, but if I didn't go break even on this one, I'd still be in 2 trades, and you would. And this is where probabilities come in. It's why you've got to play the same thing all the time. This is just something I'm gathering data on. At the moment, I'd go BE. So what would have happened here? I'd have gone BE. I'd have got a break even. I get nothing from that. I lose commissions. Instead, I could take $1,000. It gives me confidence to get back in again with that $1,000 that's free. And I'm back in now. Not bothered. See what I'm saying? Hopefully. Jingle bells and all that. So, from there, you could now start to look to scale in. And you could see that we're literally having buy to sell, mitigate, buy to sell, mitigate, buy to sell. So this could be our next mitigation, right? Mindful there's a 5 minute above. Of course, it could come there. But here you could say to yourself, right, well, we could play, excuse me, I've got the hiccups, man. We could play out of that. So, let's see if it ever comes back. And obviously, again, this price action here, honestly, I've seen this so many times. I think this might have been on the markup, actually, that I did. I've seen where we'll come in sometimes, we'll mitigate the bottom of a range, buy to sell out, and then that will be the move, and it'll just go. When we start to trend on EU, it does it all the time. And I'm like, could have got in that, right? But if you've made a decision and you want to wait, then you need to wait, and you need to just be happy with, you know, you might miss it. Looks like we're going to. So now at this point, you can go, all right, well, do I move on? Do I want to move on to this? Do I want to trade this? Or do I want to wait for, you know, the higher levels? And they're decisions you need to make in the moment. So here we've now tapped in. So let's see if we can get a chalk. Like I say, you could have just entered if you wanted to, and you would have got taken out. It's why I say play the reaction. Okay. Looks like we've swept these highs. So now let's see what we get. Swept that high. So obviously we're kind of like just building liquidity on both sides. So we still have a couple of levels we could hit. We might just die off, typical EU style. And then we go. Off we go, right? Now what happened is we came in again, deeper mitigation of this guy that mitigated that. We've had a deeper mitigation. We've pushed down. We've failed to completely break these levels. But what did we do in the process? Well, we chucked. We took out the high. We took out the low. Price came back into what caused that. And this was also a sweep. So if we mark this out. Sweep, diddy, sweep. As it come up, we took that high. Chocky wocky doodah up, chocky wocky doodah down. So you could have said, oh, well, I'm going to play that. Right? Now, obviously, this hadn't followed through yet, so you may well have waited for higher. And at the time, that's what I've done. On my markup, remember, my markup is my end-of-day markup, so I'm logging it all because I want to learn from it. In the moment, I probably wouldn't trade that at current. These, all day. Down here, it gets a little bit like this one, and I've been marking these for a while. I see this kind of thing happen so often. When you just start to get that kind of range building consolidation and literally mitigation to mitigation, buy to sell, buy to sell, buy to sell. And then you get your last buy to sell that taps the bottom, breaks, and then comes back. And that's the one you want to be getting in. That's the move. And it's like, don't have confidence in that. And it's just about logging it. And it's cool if you don't want to get in that. Remember, we're still in this bad boy. We're currently running 13%. We've already banked 2%, so we're 15% up, man. Like, and we're targeting this 15-minute demand, which, if I can grab that, which gives us 22%. And does it get there? Hell yeah, it does. Bosh. So we've done 22% plus the 2%. We've done 24% from one move. You tell me on a funded account, even on half risk, that you wouldn't take one of those a week, mate, and be chilling. It's the same thing every single week. All it is about being switched on. It's about following the same process. It's about having the same steps, and it's about implementing them over and over again. And it's about letting the probabilities play out. You know what the most important thing is? I've realised this year. It's about enjoying it, man. You should be trading with a smile. You know what? You should be going into it so excited, being like, you know what? I've got an opportunity in front of me that is absolutely life-changing. What am I going to be miserable about? I'm here. I'm connected to the Wi-Fi. I've got a drink. I've got a phone. I've got a laptop. I've got a roof over my head. I'm standing up. My body works. Everything's working, right? I have food downstairs. I have a wonderful family. We're all very healthy. You do not need to be miserable. I read a statistic the other day, right, in a book. If you can afford a cup of coffee, and it was done in dollars, it was like £2.50 in dollars, you're richer than 3 billion people on the planet. Mind blown. Like, we don't... How many times are you going to buy a coffee? You're like, life's so shit. So hard. Just lost a trade, man. Nah, man, that's not what it's about, honestly. Like, going into the new year, guys, seriously, understand the gratitude you've got. Understand the opportunity we have. Just enjoy it. Honestly, man, I can't express it enough without sounding like, shut up, bro. But seriously, it's something I overlooked a lot. And this reflection this month has just, like, blown my mind. So I hope you all have an incredible rest of your weekend. I'm going to drop this on the Sunday for you guys, I decided. If you watch my YouTube video, I hope you like the clickbait. I'm just trying to do an experiment. I'm sorry if it wound you up, but you shouldn't be looking for new source. I got you. And yeah, obviously this week, last week before Christmas, I'll probably be around till Wednesday, and then I'm going to just have a couple of days off. But we've got a Zoom Tuesday night, so we'll catch you there, guys. I hope this recap was value. I hope there's some value in it. And yeah, keep doing your thing. Keep killing it. Peace and love, homies.